Yeah, I guess everybody's joined. So good evening, everyone. Hi, I'm Shreya.
And I am Saksham. And on the behalf of Student Alumni Relations Cell, we welcome you all to the future of Web3 and crypto. Fireside chat with our guest for the evening, Mr. Himanshu Yadav.
Mr. Yadav is currently the founding partner of Woodstock Fund, which is a multi-asset investment fund focused on investments in emerging technologies, primarily focusing on distributed ledger technology, that's DLT, with emphasis on four major areas: public DLT, decentralized finance, that's DeFi, tokenization, and Web3 protocols.
And he graduated from Pilani in 2012 with a bachelor's degree in electronics and instrumentation engineering, and has previously worked at some great organizations such as Sabre Holdings and Ultimate Sun Systems Private Limited. Welcome and thank you for joining us, Himanshu sir. We are glad to have you today.
Thank you for having me, guys. And please don't call me Mr. Himanshu Yadav or Mr. Yadav or sir. You can just call me Himanshu.
All right. Okay, so I think we can now begin with the first question for our evening. So I think it can be agreed upon that the academic curriculum and the rich culture we have at BITS, it adds a lot of value to an individual's personal growth, be it in the form of clubs, departments, or projects. So I think we all would be excited to hear about like what all clubs, departments, or projects were you passionate about when you were in back when you were in college?
Yeah, so I think that's a given. That's one of the most beautiful things about studying at BITS is just the amount of cultural exposure everyone gets, right? Because we have essentially some of the smartest students from all around the country who come in and bring in a lot of different perspectives. And there's no matter what you are doing in college, you will always probably have someone who's better at it than you are, right? And that sort of discards the notion that most of us bring when we come from our school lives, that where we probably used to be some of the smartest kids in the class or in the school, right? So that really humbles you, that really opens your mind up in a direction that you're not typically used to. And just the sheer amount of freedom that we get in college, whether it's picking up your own elective courses, whether it's the sort of freedom we have in terms of the attendance required for particular courses, and how you can study different things, be part of different clubs, cultures, that really I think adds up when you look back in hindsight in terms of what really shapes you as an individual. So in terms of electives, I was always interested on the business entrepreneurship side of things. So I studied international business as one of the electives, and I was part of the college cricket team. So we played there for about 3-4 years. We also used to play at that time, and I think probably still there. We used to play for Goa Cricket Association. Those different leagues that they have, B, C, and we qualified from C to A league. So that also, and those are some of the best friends that I've made during that time, which are still with me. We're still in touch. Apart from that, I think the students from Goa would relate. There's a DC hub called Woodstock, which I think still exists in college. I used to host that hub for 3+ years, and that's where even the fund's name came from. And I think that was probably the first touch point I had in terms of a decentralized sort of LAN network that we were hosting in college, right? And the sheer amount of power that even that small LAN network within the college can have. And you guys probably would have heard of Maggie Revolution, something that started on DC and then eventually led to some good changes in the college and campus rules, etc. Right? So that, I think that also stuck with me in terms of how powerful eventually the community, and in that case students were the community, can be in term, and going forward, and how things can work. So learned a lot from that. And then I after that I was in Bangalore for about 4 years. 1 year was my internship with Sabre Holdings as a PS2 program I was part of. And then I was working on a startup where, we were trying to build an online networking portal for artists and event managers. So did that for about 3 years. That didn't really scale, to the extent that we wanted to. So shut that one down. Then I moved to Gurgaon, where we started a couple of our solar power companies. One was a power production company, one is a EPC company. So, we are growing really fast. In 2017, we were one of the fastest growing renewable energy startups in India. and we're about to raise external capital for that business. But funny story happened in mid 2017 when one of my family friends, he reached out to me, who were into real estate business, and they don't have like high power requirements in that business side. You just have like a couple of computers in their offices, and he wanted to install a solar rooftop power plant. So I just asked him, why do you want it? You probably don't even have high power requirements, and the cost of solar was still not as cheap as what it is today, right? So it was not very feasible for low power requirement business to really be considering that for the long term. Now it is definitely. So then he told me that he wanted to mine Ethereum in his basement, and that was how I heard about Ethereum in mid 2017. I was pretty curious, what it is. Obviously, I had just heard about Bitcoin before that, not really any of the other cryptocurrencies. And then in the next 2-3 months, I just started reading up more and more about it, and went down the rabbit hole, and there was no coming back. And I essentially could not focus on the solar business anymore. Was part of that whole ICO phase mania that happened in 2017. Made a lot of personal angel investments. Then the whole market came down crashing in 2018, which in hindsight was probably the best year, because eventually all the noise cleared out. And that entire year was the time where I really got to study the space a lot more, learn from the mistakes in investing that we made at that time, understand the fundamentals of the space, how the technology stack is shaping up, where the value will accrue, how it is different from the Web 2.0 stack, what is the importance of community, what are the good distribution models to have in the space. And obviously understood a lot on the market cycles, technical analysis side of things. Did courses on blockchain, also on professional trading side, in terms of how to understand and put that two and two together to really sort of decode the space. So that was about 1.5 years of I would say long struggle, and to really build up the understanding in the space. And those are the times when people around you always doubt you, right? And my parents were like, you have lost your mind. You have a successful solar company business going on, and you have no idea what you're doing for the next 1.5 years, and you don't know what, and there's no clarity on the next steps that you're going to take in the space, right? But that's the time where you sort of put your heads down and just focus on learning, and eventually just sort of trust in yourself. Things will work out, and you will figure out the next steps in whatever direction they might be, right? And so that happened in 2018, and then in early 2019, Feb 2019, is so I had a Telegram channel where I was just publishing my research on projects I was doing at that time. And through that channel, one of the people who were following me on that channel was Pranav. So he reached out to me, and we just started discussing, what do we think about the space? And he comes from traditional financial services background, so we just discussed about it, and decided to take the next step. And because the space has also evolved to a lot by early 2019, right? And it was fairly clear that if we want to continue investing in the space and really take up some sort of a serious structure to this whole business, then venture fund is probably the best direction for us, right? And I was focused on investments, and Pranav was focused on structuring the whole thing, strategic relationships, and building compliance structures around all of that. So we joined forces, started the fund in early 2019, and we did not even meet in person when all of this happened. So we started the fund, we made the first 5 investments from the fund, and then in November of 2019, we met for the first time in person. So that's how the journey started. And obviously, we started from a very low capital base, just from sort of family and friends, people who knew us, what we were doing for the last couple of years, who sort of trusted to put their initial capital into the fund. And we made only 5 investments. We deliberately kept it small, wanted to really sort of test out the thesis that we were building in the space, and see how it pans out before we start working and scaling up that thesis and deploying large amount of capital. So did that in 2019, and finally in March 2020 we got the whole COVID pandemic crash that happened in the entire market. One of the scary times, but at the same time, because we were very closely tracking the space, tracking the flow of talent, and some of the smartest founders leaving Web2 space and starting to build in the space, and also seeing how the technology is getting ready in terms of, your underlying settlement layers like Ethereum scaling up with layer 2 solutions, your other layer 1 protocols really coming up, Polkadot, Cosmos, Elrond, etc. So the underlying layers were getting ready to support the throughput of the application layer that was going to follow. And that's when we started seeing divergence immediately after 2022, when the whole quantitative easing and the stimulus plans kicked in all around the world. And that also created a sort of perfect macro environment, because there was going to be a lot of new fiat that was going to be created. So your assets, your hard assets will go up in value, right, against that fiat if you're increasing the circulation on that side. And finally, the application layer project started to kick in, and we saw the emergence of DeFi, which we call decentralized finance today, and eventually the NFTs, non-fungible token space. So that's how the journey started, and then we scaled up the team quite heavily in the last 12 to 18 months. So now we have grown to a team of 25, and half of that is pretty much dedicated to research and investments in the space. So yeah, been quite a journey to get to this point.
Yeah, that was really insightful answer, sir. It loved your wisdom-packed answer. And so moving on to the next section of our discussion about the current scenario of crypto in India. Recently, we have seen immense capital being poured into the Indian crypto and blockchain ecosystem, with seasoned VC investors like Titan Capital and Antler starting their own Web3 dedicated programs. The surprising thing is that all of this has happened despite the uncertainty associated with the virtual currencies in India. Being a person who has backed some of the amazing startups in this sector, what do you feel is the reason for all the buzz created amongst VCs in India?
It was about time, I would say. A lot of them, I think, were waiting for clarity on that side, but I think the speed at which this space has evolved in the last 12 to 18 months, it's fairly clear that this is going to be the next generation of applications and products. The backbone technology of that, and you can only wait for so long, right? Because the whole space has grown to $2-3 trillion plus in an asset class size, and all the traditional funds, they have their limited partners or investors in the fund, right? And all of them must have been putting a lot of pressure on these funds that what is our crypto or Web3 strategy, right? What are we waiting for? So it becomes sort of a race between the funds. Okay, if you are not going to figure out your crypto Web3 strategy, we probably might just deploy across some other funds which are figuring out that strategy and deploying into that space, right? Because we want to take exposure into this asset class. We can't just be sitting on the sidelines anymore. So that's when I think a lot of them, figured out different ways in terms of structuring at the right jurisdictions, creating some sort of buckets for deploying capital in this asset class. And this is only going to increase. And, we have seen a massive influx on that side from traditional funds. A lot of them probably, almost all of them have reached out to us, have been in touch with us to really understand the space better and, sort of see how they can work closely in terms of potential co-investment opportunities, etc. So I think it has started, but there is probably a lot more to come in terms of some really big institutional investors allocating to this asset class.
Yeah, those were some really invaluable points that you made. And I think everybody in the audience, like at some level, we could relate to what you're trying to convey and the kind of scope this sector has. So moving on, so in the past couple of years, we've seen there's a lot of hype being built around NFTs. First in the art sector, now the gaming sector, and its eventual association with what we call as a metaverse. So at the same time, we've also seen discussions where people just nullify the whole existence of NFT, calling it a hoax. So I think we'd love to know your opinion about NFTs and their future in India, not only in India but like globally as well.
Yeah. So I think NFTs are just getting started. What we have seen is the first sort of big wave of NFTs being really hyped up in the media, and a lot of that has come from what we internally call cultural NFTs, right? Where a lot of the celebrities are doing some sort of rare drops, and then just getting to scratch the surface of this space. And in fact, we have a good article written on our website, that I recommend people to check out. So that's specifically on NFTs and written actually by one of the fellow Betsians who's part of our team, Ishita. So cultural NFTs is what created this whole first wave of hype. And now we are going to move a lot towards utility NFTs in terms of, what are the real inbuilt utilities that NFTs can create. And one of the very simple examples is in your gaming industry, you have your in-game assets, right? Like people purchase skins, weapons across different games, etc. And most of that stays within that particular game and system, right? You can't really move it out of that system, can't cross trade it to other products, etc. And because it's a centralized system, you might lose access to all the things that you acquire and build up in that, right? So all of those will eventually become your NFTs, which will be tradable across different games, etc. And that will be in your control over a decentralized network or a decentralized blockchain game, rather than a centralized gaming entity controlling any of that. So those are the kind of things that will start happening a lot more. And this is just one very simple example that I think a lot of gamers can probably relate to. But let's say you have in logistics and services business, you have bills of lading, right? Which are your receipts for the freight services. All of that can be transformed into a unique utility NFT, and those can be exchanged and traded on a platform very easily. So those are the kind of real long-term NFT use cases, applications, even for artists, etc. You can release your music as an NFT. You can let give out a limited amount of NFTs for an upcoming artist. They can issue a limited amount of NFTs, which can even have future revenue rights as they grow for every music they release, or any song that they release, any movie that they might release in the future, etc. So those are the kind of applications that people have started thinking about. We've already started seeing some products and startups working in that space, but that is what will really drive the value for the NFTs, right? Cultural NFTs also will be a part of it, but that's probably not where the maximum utility comes from. That's where the attention comes from. And once the attention is there, once people are, have really started digging deeper into what all NFTs can do, that's when all of these things start unraveling.
That was some really interesting views you put down for us. And honestly, for me, they were eye-opening. So as we have seen big corporations entering the metaverse market, with Facebook acquiring Activision, which is one of the biggest tech acquisitions yet, and Facebook rebranding itself to Meta, and Nike and Adidas launching their own NFT collection. Given the aggressive strategies put forth by these big companies and organizations to bring some of these futuristic concepts like NFTs, metaverse, blockchain, and all to the masses. So I wanted to ask that what change can we as a layman expect in our day-to-day lives in the near future?
So it's okay. There are two ways to think about it. One is these companies have probably realized that so what essentially blockchain does is provide you a peer-to-peer platform to transact with anyone anywhere in the world, right? And what they have realized is that if this is what the technology is going to enable, and if you translate that into artists and content creators, what we call the creator economy, whether it's your YouTube influencers, etc., now will have a platform based on this technology through which they can reach out directly to their fans and essentially not rely on a middleman or a company like YouTube or Facebook. They understand that that's going to be a fundamental shift in the business model. So they are the smartest ones are really being very aggressive in terms of becoming part of that next generation of products, which all these content creators and the creator economy will use, right? And that is why we are seeing such an aggressive push in terms of companies trying to figure out their NFT metaverse strategies. Facebook obviously, I think, has taken a big step in terms of just rebranding to Meta and what they are doing in terms of their push towards the metaverse space. So we are going to see more and more of that happen as these companies essentially try to pivot around what this technology is enabling.
Yeah, I think that was really fun to hear about. So since we've talked about cryptocurrencies, what we also see is that financial institutions are also undergoing changes in these recent times. There's this concept of a DeFi, that's decentralized finance, which is being talked about, and we all can agree that it's quickly catching the attention of the masses with inception of a number of DAOs, that's decentralized autonomous organizations, working on some really amazing projects and even attracting conventional investors. What do you feel would be the future of decentralization in tech and in our daily lives as well?
It's going to play a big role because, as I said, what the fundamental shift in the business models of this space is compared to what happens in Web 2.0 is you are essentially relying a lot on the network effects that are created by community being a stakeholder in your product or platform, or however you're taking it forward. And a very simple way to put it is, you have Uber today, right, which is a central company which makes all the money when you book the cabs. What if there is a alternative where you have a decentralized Uber where every time there is a booking happens on the platform, all the collective users, let's say, get 1 cent, 10 cents out of that booking, right? So just if you just think about and compare which one will eventually succeed, it is going to be the second one, because you have aligned a extremely significantly higher number of stakeholders in the success of that particular product. So they are going to use more and more of that compared to using the first one where it's completely centralized and only very few people benefit from it, right? So that's why we are seeing a lot of interest coming into decentralized finance and DAOs, etc., because the stakeholders on that side are increasingly getting higher and higher and higher. And smart investors realize, okay, if they are creating the network effects because of the incentives being aligned to use these new platforms, it is only going to amplify, right? Network effects, the basic nature of network effects is they grow exponentially. You pull in more people, that just increases as more and more people join that particular system or network, right? So that is why we're seeing a significant interest where people have understood that, okay, these new platforms will rely a lot on network effects, and they have all the ingredients to create the perfect storm of network effects by incentivizing all the stakeholders based on these new value distribution models which tokens, etc., bring in.
Yeah. So yeah, thanks a lot. Decentralization can be a bit difficult to wrap your head around, but I feel that your answer surely cleared a lot of doubts in our audience's head. But as we all know,
one thing
yeah.
I'll just add is, a lot of people seem to get confused whether they look at something and sort of say, okay, it's centralized or it's decentralized, and they try to just put it in one direction. How any good product starts is through a certain number of people building it, and there is a path to decentralization, right? It's a journey to decentralization. It's not a specific destination, because over the period of time you want it to be more and more decentralized. You want more and more people to continue to join the network as your network grows, right, till you reach the probably almost the entire population of the world. So don't get stuck on whether it's centralized or decentralized right now. Try to dig into what is the path that they are taking, at what step they are continuously increasing their aim or goal towards decentralization.
Yeah, so that was really insightful, that it's not a binary 0 or 1, that it's decentralized or centralized. It's more of a journey, right? So I feel we have this has been discussed by a lot of business and tech leaders, but like the ecosystem is quite new. And when we are specifically talking about, let's say, Bitcoin and layer 2 Ethereum, what do you feel will be the eventual plan to solve its energy consumption problems and scalability issues?
So Bitcoin is the one that is going to probably stick to proof of work consensus mechanism, which requires a lot of high energy. Ethereum is anyway moving to proof of stake. Within this year, that transition is happening. So I don't think that concern will exist for Ethereum anymore once it moves to proof of stake consensus mechanism. Bitcoin will, at least there are no major discussions happening for Bitcoin to move to any other consensus mechanism. So there, but what we are seeing is as large serious players are getting involved in the space who are very particular and concerned about the ESG goals that they have internally. We are seeing a big push towards more and more of that mining being done through renewable energy sources, right? And all kinds of sources are being used. I think just recently El Salvador started a mining farm for Bitcoin on volcanic energy, and that this is so cool to see in terms of how people are thinking about all of this. And there are many good investors. You guys probably would know Kevin O'Leary from Shark Tank. He's making a big push in terms of creating renewable energy based mining farms for Bitcoin. So we are going to see a big push on the Bitcoin side for a lot of renewable energy being used on that side. But for all the other systems, they mostly are going to be on proof of stake, which does not have high energy requirements in the first place. So those concerns are probably a lot more exaggerated in the media than they should be.
Yeah, sir. Thanks a lot. And you mentioned about consensus protocol. Can you just break down that for our listeners? What is a consensus protocol?
It's when you're building a decentralized network, it's essentially you're creating blocks every few minutes or every few seconds, depending on a particular tech stack or architecture you're using, right? And you have all the different participants. In Bitcoin's case, it's called miners. In proof of stake network, it's called validators. So let's say you have a million validators around the world. How do they come to a consensus for every block, and which transactions have happened in that particular block? So that way of arriving at that consensus is all these different things: proof of work, proof of stake, delegated proof of stake, uh, proof of time, etc. have been explored. So those are the different, is in very simple ways, how do you arrive at a consensus across million computers which are running validator nodes for a particular network, which come to a sort of conclusion, okay, in the last, for example, 10 seconds, these are the transactions that have happened on this network, and we all agree, and we create a block based on those transactions, and we move on to the next block, etc.
Yeah, I think that was really insightful, and you put it in a very interesting way so that everyone could understand it easily. And I think we talked about DeFi previously. Now, there's a lot of discussion going on around regulatory authorities in this space. How do you feel regulators plan to dispel fears surrounding DeFi and its association of being in, unregulated system where small retailers can be tricked?
So see, eventually, as any system, especially a financial system or product grows, regulations are very important, right? You cannot live without regulations, without clarity on what are the expected guidelines for that system or the users in that system to participate in that, right? And that is a good thing. It's really good to have these debates, understand what does a DeFi system exactly do, understand who are the different stakeholders in it, understand what are the risks that go into that particular system, and then build the right kind of solutions and protections that is required in the space, right? And that is what we are seeing across the world, where now almost all the regulators have gotten to the stage where they are really trying to understand, okay, this is exactly how the system works. These are the kind of potential protections that we need to build in, and checks and balances we need to put in place. And that is really good, because as soon as that happens, a lot of people who are sort of sitting on the fence and not sure about how to interact with the system, it will open the floodgates to all of them. Okay, now they have a very clear defined path in terms of whether they need to do a KYC across a particular platform, and there are other solutions being built where your privacy can be much better protected, where you have zk snarks, etc., where you don't even need to show the details of exactly your whatever private information you have, but they just get verified automatically on chain based on certain parameters. So, and we're really looking forward to those regulations coming into place, and that will probably happen this year, maybe next year, but I think they're close, and that's good and healthy for the industry.
Yep. Thank you so much, sir. And also, there's a question in my mind that there are these startups coming that currently investing in DeFi is difficult. So there are startups coming that are trying to make crypto as a asset class for retail investors. You mentioned that crypto is becoming an asset class for VCs, but there are startups that are mainstreaming crypto as an asset class for retail investors, like investing in fiat currencies and getting fixed returns. To name a few, for example, Flint Money or Pillow Fund. So, what do you think the challenges that these companies could face, and how can they uh, make the average Indian retail investor convinced that he or she will get the return?
Uh, the only thing that eventually works in the long term is just doing it and creating a track record of doing it right. And for a lot of these startups, it's about just fine balancing and understanding where they are deploying the capital of the users that are coming in. How do they create long-term sustainable returns in the space, right? And for example, let's say they accept 100 rupees of capital. There are different strategies a lot of these startups are exploring, where let's say 25 rupees of that you deploy it into a stable coin, a sort of fixed return platform, right? Maybe a centralized platform like Celsius or Nexo. Maybe 50 rupees of that you deploy across a, a lot more riskier DeFi protocols, where the potential returns are higher, because that's how they have designed their incentive models. So it's about fine balancing and ensuring that you balance the risk that comes with it, in terms of making sure that all the smart contracts where you're deploying across DeFi protocols are audited. And even if they are audited, the no smart contracts are 100% sort of hack proof, right? There are a lot of examples we have seen where even most audited smart contracts have been hacked, and exploits have been found in them. So it's about finding that fine balance in terms of making sure you figure out the best strategies and you distribute your risk the best way that you can. And but a lot of them will be sort of your, as you said, fixed income generating products, right? Maybe like 5%, some are generating 10% yield or interest, some are generating 15 or 20% yield or interest. And that, I would say, is a different category of your fixed returns compared to how early stage venture capital works, where because that in early stage venture capital you just take bet on very early stage teams and founders with a very long term sort of mindset and horizon, right? And there it's like investing in a startup or an idea or a use case or a founder at a very early stage at obviously lower valuations, and working with them closely and helping them build the product, get the users, get the traction, and eventually scale the company up to a bigger value and valuation. So those are, I think, it's slightly different in terms of how they work in a particular startup which is focusing on fixed interest versus how venture capital works.
Right. Right. So moving on and talking about the ecosystem, I personally find it difficult to not include Web3 in some random conversation that I have with my friends. And when I roam around in Pilani in streets while going to the mess, I hear some crypto blockchain words around me. So, sir, how do you see the Indian Web3 ecosystem growing in the coming years? And what are those some trends that we'll see in 2022?
There's a lot of interest coming, as you rightly said, right? Even you guys are discussing a lot about Web3. And I think a large credit for that goes to the massive success we have seen for some of these companies. Like Polygon has done incredibly well, and put India on the map in terms of building a very serious scalable product that can be used by everyone around the world. CoinDCX, Coins Switch Kuber, WazirX, these guys have done incredibly well, and there are lots of other projects that are doing really well. So now people have started to take notice that there are opportunities to build really large scale valuable products, which can capture value in multi billions of dollars. And the speculation phase of the industry has also gone. I would say in 2017, 2018, there were lots of concern. It's all speculative, lots of ICO scams happened, valuations were ridiculous. But now with the emergence of your application there, like DeFi's, NFTs, what we just discussed, people are seeing, okay, there is a clear utility and use cases that are being built on top of these protocols, right? And that's what is creating a lot of interest in the space. And even we have seen incredible amount of talent starting to build from India in the space, right? And in fact, almost I think 35-40% of our portfolio companies have at least one Indian co-founder, because we also like to invest heavily in the Indian ecosystem in particularly. But some of the very smart people who are building products across all different categories, whether it's your DeFi, whether it's your layer 2 solutions, whether it's your metaverse projects, a lot of IPs being aggregated in India, and teams building on that side, and that is good to see, because this is the next big wave after the .com, right? In terms of how we call what .com did for communication, this blockchain is doing that for value and transactions, right? And that is probably one of the biggest sectors in the world, because you're tapping into the financial services sector, which in itself is multi-trillions dollar of spaces, right? And rebuilding and redesigning products for access to financial services around the world. So it's really good to see that. And we are also working very closely with uh, some incubators on ground, universities, etc., trying to see how we can help guide them, point them to good use cases, etc., that people can start building on.
Yeah, I mean, being a person who's recently started reading about all of this sector, even I agree with the fact that even you mentioned that all these products, all these projects and startups have definitely helped Web3 reach the masses. So even like Woodstock has already been in Web3 space long before it became mainstream. We would be very happy to hear about your vision for Woodstock in the coming years.
Yep. So we started, as I mentioned, our fund one in early 2019. We have been deploying actively through that. We have about 45 plus portfolio companies through fund one. We recently started raising for our second venture fund, which is focused a lot more towards family offices and some of the institutional investors. So fund one has been deploying actively in early stage projects, like sort of very early stage projects, ideas and founders. And fund two will be now start to deploy across early growth stage projects. So projects which have already been there, have already gotten a certain traction, and are potentially emerging as market leaders, right? So we'll be covering both the segments of investments from that point of view. And essentially, what we are trying to build here is what we call a east to west corridor, where we work very closely with the Indian ecosystem, invest heavily across the Indian co-founders, Indian ecosystem, and help them access the global market through the network that we have built, right? And introduce them to the right partners, right? Integrations that they should have within the space, even within our portfolio companies, and sort of build that bridge for them from east to west, while at the same time we invest in all the global teams and projects, right? So anyone who's building in, let's say, US, Europe, Australia, we have a very, because of our access to the Indian ecosystem, we really help them tap into the India market, right? Where we open up the India and the Middle East Asia market for them, where we have very strong networks in, and really help them, build a strong marketing muscle here, get the adoption, reach out to the users here, help them with any synergies, help that they need across this region. So that's what we are trying to build. Fortunately for us, we started working in the space when none of the traditional VCs were really serious about it, and that has given us a good amount of experience. And we have emerged as one of the probably the oldest and the largest blockchain crypto focused fund out of India, right? And that's when we work very closely with the portfolio companies across multitude of things. We run validator nodes for proof of stake networks in-house. We help them with hiring requirements. We work on them on designing their token engineering models, token utility models, community reward incentive models, and all of that because of the experience that we have built in the space. So that's a sort of long-term vision in terms of how we can, at least from venture capital point of view, build a very strong fund which works closely with the portfolio companies, focuses a lot on providing the right value that these portfolio companies need, and really help them, help some of them emerge as the next market leaders in terms of Web3 products that they build.
Yeah, that was really exciting to hear, and we're sure Woodstock is going to the moon with that. And so coming on to my next question, what is one advice that you'd like to give to all of us or any student in college who aspires to, enter this new age of Web3? And additionally, what are some of the tips, resources, or strategies that you'd recommend to everyone present here to get acquainted with this space of Web3?
So the first advice would be just get started and figure out your own way, because this whole space is still so new. There is no proper structures to it. You won't get, like well-defined courses in college or sort of a MS degree specifically in blockchain right now to really understand all of this. And everyone who has been working in the space, who has, either built a product or has done something good in the space, everyone has been self-learners. So you just really need to put your heads down, start navigating, start with your Bitcoin, Ethereum, understand what proof of work is, what proof of stake is, understand why we needed Ethereum, what Bitcoin cannot do that Ethereum was required. Apart from Ethereum, why do we have other layer one protocols? What were the shortcomings of Ethereum that other layer one protocols started solving? Where the value will accrue? So there's this fat protocol theory that everyone should go read up about and understand how this Web3 stack is different from Web2 stack, because in Web2 stack all your value flew to the accrue to the application layer only, like your Facebook and Google's, where in this stack even your base layers like Ethereum, etc., are accruing value, and your top layers are also accruing a lot of value. So understand where the value might accrue, what are the risks, trade-offs, different protocols have built in, what stage the whole technology is at, because a lot of people make that mistake of um, sort of overestimating where the technology is at, where it might not be ready to support some particular kind of applications, which is probably what happened in 2017, right? A lot of application layer projects came in when your underlying settlement layer was not even ready to scale. So this, put your heads down. It's about self-research, self-learning. Obviously, we can point you to some resources, etc., and we can share a doc on that for people who want to go through it. But it is going to require a lot of self-learning in the space, and it's not difficult, because another good part about the space is, because it's all open source and community based. The community is very welcoming. So if you are, let's say, researching on any project, join their Telegram group, join their Discord groups. If you have any questions, just ask your questions there, and you will get the answers from community from all around the world, right? So you can learn very quickly. You can make friends in the space who can you can bounce off ideas from, and just get started. So one thing I always say to anyone who's really interested and wants to get started in the space is, give this space at least 3 to 4 months. You give this space 3 to 4 months of dedicated time, really get down into the individual projects research, start talking to the community. You'll start understanding the power of community and network effects that is being created at the ground level, right? Which will create the swell which is going to come in the coming years. So give yourself at least 3 4 months. It might get complicated. It is hard because it's at the end of the day cryptography, and not everyone is computer science or cryptography expert, and it's completely fine. You are not supposed to understand all the finer nuances of it. First and foremost is to build a very important broad level view, and then see what really excites you, where you want to contribute. And again, because these are startups, it requires everything. Not only, it does not require only your developers who are building the products. It requires product managers, it requires marketing talent, it requires business development talent. So whatever your strengths are, once you really start understanding the space, you can start contributing in those areas.
Sure, I'm sure everyone would have definitely taken notes from that, and this conversation would have instilled a lot of curiosity in our audience. And like recently, like BITS also introduced disciplinary electives like blockchain and cryptography in its curriculum. It's so exciting to see educational institutions also coming into this space, right? And so I'd like to ask you a different question. And it's if in some catalysis, all the knowledge about crypto, blockchain, and Web3 was destroyed, and only one short sentence that could be passed to the next generation, what would contain the most information in a few words?
See, it's a flawed question. This is not going to be destroyed. I know a lot of people seem to have that concern or risk, but let's put that apprehension behind us. This is here to stay. And I'll just quote one of my favorite educators in the space, Andres Anthopoulos. I highly recommend everyone go through his YouTube videos. It's one of the most smartest minds in the space, who comes from distributed systems background, right? And what he says is, one of his videos is, uh, if you essentially the question was the same, right? If you think that this should not happen or this must not happen, and there should not be any crypto or any of this, his simple answer there was, this has happened. We cannot unlearn this technology. We cannot put it back in a bag, right? It's a simple technology based on mathematics, and now it's completely open source, available on GitHub. You shut down a Bitcoin network, any talented programmer over a weekend can create a similar network that probably does things better than what Bitcoin does today. So this is now the world we live in. It is going to evolve towards peer-to-peer transactions on a network and a system which cannot be censored, which cannot be shut down. And that is the reason why it has not been shut down, because there's no way to shut it down. How do you shut down a completely decentralized peer-to-peer network? You can't, unless you are just turning off the electricity and internet all around the world at the same time, which we know is not going to happen, right? So let's put that apprehension behind us, and regulators are also moving in the right direction now. So that is not a concern anymore. It's about really understanding how powerful this technology is, how it will reshape all the business models that exist today, where a lot of middlemen are taking a huge amounts of profits, centralized companies, and how those business models will be transformed with the help of this technology. So the advice there would be to really focus on that part and not be worried about what happens with technology and regulations. Those things eventually figure themselves out sooner or later.
Yeah, I think that was an interesting answer, and we're just all here to look what happens in future. So that brings us to the end of our discussion. I'd like to take a moment here and thank Himanshu sir for taking out time from his schedule today and joining us here. I think it was an enriching discussion for everybody that's present here and has joined us today. So thank you, sir, for joining in.
Thank you for having me. And anyone who wants to, learn more about the space, more than welcome to reach out to us. A large part of our team is, from BITS itself, and I'm pretty sure everyone will be really happy to, help you guys, guide you guys in terms of how to take the next steps in the space. Thank you for having me. Thank you, everyone.
Thank you. Thank you
so much, sir.